Fear of missing out, or FOMO, is the silent killer of futures day traders and scalpers. It's that burning feeling when you see the ES ripping higher and you're not in it. It's watching crude oil gap up 20 points while you're sitting in cash. It's seeing other scalpers in the chat room bragging about their quick 50-tick winners on the NQ while your account sits flat for the day. FOMO turns disciplined futures traders into desperate gamblers who chase every move and blow up their accounts. As a futures day trader, FOMO hits different than regular investing. You're dealing with leverage, speed, and constant action. The ES can move 10 points in minutes. Crude oil can swing $2 in an hour. The currency futures can gap overnight and never look back. Every second you're not in a trade feels like money slipping through your fingers. This creates a psychological pressure cooker that makes even experienced traders do stupid things. Here's what FOMO looks like when you're scalping futures. You're watching the 5-minute chart on the ES, and you see it starting to break out of a consolidation pattern. Your system says, wait for the pullback, but the futures contract just keeps grinding higher. Tick by tick, point by point, you're watching potential profits disappear. Finally, you can't take it anymore, and you jump in long right as smart money starts taking profits. Or maybe you're in a futures trading room and someone calls out a trade on crude oil. They got in at $70 and it's already at $71.50. You didn't see the setup in time, but you jumped in anyway because you didn't want to miss the move. Of course, that's exactly when the move ends and crude oil starts dropping back down. This isn't just bad timing, this is FOMO destroying your edge as a futures trader. When you chase moves out of fear of missing out, you're buying high and selling low, which is the exact opposite of what profitable trading requires. The problem with FOMO in futures trading is that it feels so justified. These markets move fast and the opportunities can disappear in seconds. Unlike stocks, where you might have hours or days to make a decision, futures can gap and run without giving you a second chance. Your brain starts telling you that if you don't act right now, you'll never get another shot at this particular move. But here's what your FOMO brain doesn't want you to remember. In futures trading, there's always another setup coming. The ES will have multiple breakouts every single day. Crude oil will give you dozens of scalping opportunities in a session. The currency futures are constantly making moves that can be profitable if you're patient and disciplined. The reason FOMO is so powerful for futures day traders is because of the leverage and the speed. When you can control $50,000 worth of crude oil with just a few thousand in margin, missing a $2 move feels like you just lost $1,000. Your brain can't handle the math of missed opportunities, especially when those opportunities happen multiple times every day. Social media makes FOMO even worse for futures traders. You see other scalpers posting screenshots of their quick winners on Twitter or in Discord channels. Someone caught a perfect bounce on the NQ for 30 points. Another trader scalped a news spike in natural gas for 40 ticks. Everyone seems to be making money except you, and your brain starts screaming that you need to get in on the action. The trading rooms and chat groups make it even worse. There's a constant stream of people calling out trades, posting their winners, and creating this atmosphere where it feels like everyone is constantly making money. You start feeling like if you're not taking every trade, if you're not constantly active, then you're missing out on easy profits. Here's the brutal truth about FOMO in futures trading. Most of the moves you think you're missing out on aren't actually that profitable when you factor in slippage, commissions, and the high probability of getting in at the wrong time. The traders posting their big winners aren't showing you their losers, and they're definitely not showing you their net profits after expenses. FOMO also makes you forget about risk management. When you're desperate to catch a move, you start taking bigger positions than you should. You might risk more on a single ES trade because you feel like this is the one that's going to make your day. You ignore your normal position sizing rules because the fear of missing out overrides your discipline. The worst part about FOMO trading is that it usually happens at exactly the wrong time. You jump into a futures contract after it's already made a significant move, which means you're buying at resistance or selling at support. The smart money that got in early is looking to take profits right when you're entering the trade. So how do you overcome FOMO as a futures day trader? The first step is accepting that you're going to miss profitable trades every single day. This isn't a failure, this is part of being a disciplined trader. Every successful futures scalper has stories about the massive moves they weren't part of, but they understand that consistency comes from following their system, not from catching every opportunity. Create a detailed trading plan that specifies exactly when you'll enter trades. Write down your setups, your entry criteria, and your risk management rules. When FOMO strikes and you want to chase a move, ask yourself if this trade meets your predefined criteria. If it doesn't, then it's not a trade you should be taking, regardless of how much it moves afterward. Set specific times for trading and stick to them. If you decide you're only going to scalp the first 2 hours of the session, then close your platform after those 2 hours, no matter what's happening. This prevents you from sitting in front of charts all day, constantly exposed to FOMO triggers. Limit your exposure to FOMO-inducing content. Leave the trading chat rooms that focus on bragging about winners rather than education. Unfollow the social media accounts that constantly post screenshots of big trades. Stop watching financial news channels that make every market move sound urgent and important. Keep a FOMO journal where you track every time you feel the urge to chase a trade. Write down what you were thinking, what triggered the feeling, and what you ultimately decided to do. Then check back later to see how that trade actually performed. You'll probably find that most of the trades you were afraid of missing either didn't work out or weren't as profitable as they initially appeared. Practice patience by setting up your charts and then walking away for set periods. Train yourself to check the markets at specific intervals rather than staring at every tick. This helps reduce the constant emotional pressure of watching every small move and feeling like you need to act on all of them. Remember that scalping futures is about consistency, not home runs. You don't need to catch every move to be profitable. You just need to catch enough of the right moves while avoiding the wrong ones. A scalper who makes consistent small profits with good risk management will always outperform someone who swings for the fences on every trade. Finally, understand that FOMO is a normal human emotion, but it's also the enemy of profitable trading. The goal isn't to eliminate FOMO completely, because that's probably impossible. The goal is to recognize it when it happens and choose not to act on it. Every time you feel FOMO but stick to your trading plan anyway, you're building the discipline that separates profitable traders from everyone else. The futures markets will always be there tomorrow. There will always be another breakout, another news event, another perfect setup. But if you blow up your account chasing every opportunity out of fear of missing out, you won't be around to take advantage of the real opportunities when they come.